The newest kid on the block will be Wakefit, and they will be launching with their IPO soon. To discuss more about the company, we are joined by Ankit Garg, the co-founder, chairperson and chief executive officer and executive director, and Chaitanya as well, the co-founder and executive director of Wakefit Innovation. Coming to you, Ankit, first, if you could take us through the business model of the company, what will be your main focus going forward? Will you be focusing more on the online channel or the offline channel? And what will be the overall strategy for Wakefit going forward?
See, Wakefit business model is a direct-to-consumer company model. In this process, what we have done is we have identified ways where the customer interact with the brand, whether it is online or offline. I think the boundaries have become very, very thin over the period of time. You would have noticed that many D2C companies in the last few years have just started being online and they finally became offline. Offline companies started offering things online. So I think it's a mix. We feel that going forward, wherever the customer wants to experience a product, wherever the customer feels comfortable making a decision on buying or not buying a product, it has to be omni-channel way. So hence our focus as a company is also to make sure that we build an omni-channel way of building the business from here onwards.
377 crore is something that you're looking to raise via fresh issue. How will you be utilizing these funds, and what is the kind of revenue potential one should expect once the capital expenditure is completed?
So the funds that we are raising on the primary side is going to be deployed on 3 or 4 major areas. First and foremost, we are expanding our omni-channel presence, like Ankit said, opening up of more stores in more cities, in more formats. That is a very big expense that we are going to take over. Because that's an investment that will pay off over a period of time. The second big thing is to look at marketing and advertising. Over a 3-year period, we will continue to steadily deploy into the right channels in a very frugal, thoughtful, careful manner. We've always had a marketing budget that is barely about 7 to 8%, 7 to 9% range of net revenue. We will continue to steadily invest in marketing. The third big area is capital expenditure for machinery and so forth, which will continue to give us dividends over a period of time. In terms of growth potential, while we cannot state a number, the focus area is going to be to launch more new products, more new retail formats, and more new premium ranges, because there is a premiumization drive happening on the aspirational consumer side who want world-class products at affordable price point. So we will continue to invest on those.
Right. You did become profitable in the first half of this financial year. So what aided this? Was it because of operations of scale or because of some cost item which was lower in the first half?
See, as a company, we invested 2 things majorly. While as a company, we have done multiple things to improve on profitability consistently over the last 3 to 4 years. But 2 major things that happened to us was, one, that we invested in a very large state-of-the-art manufacturing facility in the year of 2022. And that time was a time when we also, was just 1 year old in the furniture. The underutilization of the factory was one key concern which we had to invest to make sure that we are building the right products at right quality for consumers. But as we have scaled in our furniture business, we have been able to optimize the manufacturing cost. We have been able to optimize the inventory cost and stuff like that, which has led to profitability consistently in the last 6 to 8 quarters, not just the first half of this year. Second, also, when we went offline in year 2022, we had just 10 stores in the year of 2022. Now we have about 134 stores live as on today. But over the period of time, we have seen that when the stores were not so mature, when they were so early, just 3 months old, 6 months old, 9 months old, you have seen over the period of time, these stores have been growing in a very healthy double-digit triple SG, same store sales growth, which has also led to optimization on retail cost, marketing cost. Plus, everybody in the market, we are seeing premiumization is actually working in favor, and we have been fortunate enough that through our retail stores, we have been able to expand our gross margins, which has led to improvement in profitability. I think these 2-3 big things happened to us, other than a lot of optimization as a company we continue to do on all fronts of the P&L.
Just to add, we as a physical company which has factories, research and development, warehouses, there is nothing that we can do overnight to either turn on or turn off profitability. So like Ankit said, it's a quarter-long effort where over the last 12 quarters we put in efforts. So we've again come back into profitability over the last 6 to 8 quarters. And even in the first 4 or 5 years of our existence, we were a profitable company by DNA. So we've just come back to that same thing.
So, sir, is the first half EBITDA margin that you saw of around 14%, is this sustainable even going forward?
The only thing that we can say is to reiterate what we said just now, that efforts in our company are based on quarters long effort. So these initiatives take a long time to come into fruition, whether on manufacturing side, whether on warehouse side, and so forth. So things that we do usually tend to be sustainable over a period of time. It's not something that can be an overnight switch. So our efforts are to continue to increase premiumization, increase same-store sales growth, launch new products that customers want, and open more stores in the different regions that we were not present in. We are barely present in about tens of few cities. Like Ankit mentioned, 134 today, but as per RHP, it's 125 stores that were live as of end of October, so end of September. So we will continue to double down on those aspects.
Right. So you started off as a mattress company and now have forayed into other segments as well. But mattress continues to remain or continues to contribute over 60% of the top line. So as per your listed peer, the competitive intensity is very high when it comes to the mattress segment. So how are you addressing this, and does high competition means that margin will remain under pressure for the company?
See, we as a company, we are a new age company. We are just about 10 years old, but our whole DNA is very different than some of the traditional companies or some of the listed peers. Why I say this is because, we behave very differently when it comes to customer. Innovation is at us. It is always at the forefront of the company. Like, for example, we were the one who brought in 100 days trial period. Like, imagine nobody in India could even think of saying, can you return the mattress if you don't like it as a brand? But we did it. We were the first one who sold mattresses online, like way back in 2015. Nobody could even imagine that mattresses could be sold online, and we could pass on a lot of middleman cost, back to consumers as savings. By that matter, we became almost 30 to 40% cheaper than our competitions. We also invested heavily in terms of consumer policies, integrating backward, which means that we had set up our own factories, we have set up our own warehouses, now we have our own retail stores. So we are in a very different company in terms of the design of the business, which we believe is very differentiating in terms of how we reach out to customer. But more than that, we believe that we are just not the mattress company. In the last 5 years, we have also scaled up our businesses into 2 more sectors, which is furniture and home furnishing. Both of these businesses are more than 100 crores per year for us. Furniture is even much larger than it's coming very close to mattresses, in fact. But the point is that we want to be that company for consumers, which they should think about as a home solutions company, which is a very unique proposition compared to a competition, which ultimately leads to a lifetime value increase for a customer. Imagine a customer who buys one mattress in maybe 10 years or 15 years in India. But with the same customer, we are able to sell a sofa, we are able to sell a wardrobe, we are able to sell a bed sheet, and maybe a lot more products under the home improvement, and hence the lifetime value, and hence the consumer propositions, the backward integration that I spoke of. There are lot many things that we do for consumers, which makes us very unique and very relatable. I guess that will play out in the long term compared to, competition will come and go, competition will invest in pricing, discounting, whatever they might do as tactics. But I think we are a very strong believer in innovating and investing behind what is going to be appreciated by customers, and hence we believe this is what we should continue to do and scale.